Sue, it appears that retail traders are now taking aim at silver.
Yeah, we started to see silver futures surge last week. We're seeing that again happen in the Asia Open, and all related assets such as silver coins, bars, ETFs. In fact, over the weekend before the Asia Open, coin sites such as Money Metals, SD Bullion, GM Bullion, Apnex, the Wall Street, or I should say the North American version of Walmart in terms of being able to sell a lot of different coins and metals, they were unable to process their orders because demand was just off the hook. And if you take a look at silver, which has been moving higher, the silver ETF, iShares Silver Trust, they were up 6% in the past week, and it's expected to continue to move higher given the attention now of these Reddit traders. In fact, investors were seen as holding on to the physical bars, not taking profits, and that seemed to add to a perception of a very tight supply. Again, it's the same group of retail traders that we're seeing pushing GameStop to unprecedented highs, but a lot of market observers point out, even though the hashtag is silver squeeze, it's a lot harder to squeeze a commodities market, and there really aren't a lot of short positions in silver. Further, the size of a single stock like GameStop, where the volume before the big run-up was about 50 million daily last year, pales in comparison to the average volume we see in the silver market, about 11 billion in the silver futures market in 2020. And so commodity short squeezes can happen, but market watchers note there simply isn't a large silver short position to squeeze. In fact, all the banks have been recommending hedge funds and institutional investors go long. So it's expected that perhaps this Reddit army may be able to cause a short-term pop, but because the market is overwhelmingly long, it's not quite sure what it will do beyond that. Heidi?
Yeah, and so, of course, last week we saw hedge funds taking some pretty big losses in the chin as a result of all this. What's the latest? Yeah,
this Reddit-fueled army of investors definitely put some hits on the market, and in particular, a lot of hedge funds and short sellers. Melvin Capital is one of the most visible of the walking wounded hedge funds that have borne the brunt of losses by shorting many of the stocks like GameStop that soared higher because of the Reddit trades. According to people close to the matter, Melvin Capital lost 53% on investments in January. And again, we now know that a large hedge fund and Citadel Securities, which is tied to Citadel Hedge Fund, along with Point72, were investors in Melvin, so they took hits. And what's very interesting, there's been a lot of speculation and focus on Citadel Securities. Again, it is the sister of Citadel hedge fund, and Citadel now saying they're not involved or responsible for any of the retail brokerage decisions, but a lot of focus on what their involvement may be. Back to you.